Guys, this is S&P 500 weekly technical analysis for the week of February 26th. Now on Monday, if there comes a flat open or a gap up open or a little gap down open and immediately after open the S&P 500 as well as the Dow Jones, they move up, then in this case, or this will be the only case in which we can say that the entire market, S&P 500, Dow Jones, Nasdaq, they are sustaining and they are going to sustain further. The second part is that as of now, the Dow Jones as well as the S&P 500 has reached to a strong resistance zone. Okay, so that is again a reason that we need to be careful and we need to analyze the open and the movement in the first hour on Monday to confirm or to see what is going to happen in the entire week. Now the point number 3 is a special candle which was formed in the S&P 500 and also a special candle which was formed in the Dow Jones. There will be some conditions for the reversal. However, the formation of these two candles simultaneously in the Dow Jones and the S&P 500 simply indicates the bearish pressure. And this was my second update to my Patreon community members, wherein I have clearly mentioned that as long as it is sustaining and trading above this number, this heavy support level, there will not be any profit booking. And at the same time, any bullish movement will be limited to this particular resistance. Now the best point of the previous week was this particular candle which was formed on Wednesday 21st of February. So what is so special about this particular candle? In my previous S&P 500 weekly technical analysis, I have very clearly mentioned that if there comes any bearish movement, then we will have to see if there comes two consecutive closings below this the red moving average. However, if there comes only one closing below this the moving average, red moving average, which was there on Tuesday 20th of February. And in my pre-market update on February 22nd to my Patreon community members, I mentioned that yesterday, means on Wednesday, in last 30 minutes, there came an extremely heavy bullish retrace because of Microsoft. And that was clearly a manipulated move. But through that move, the market cleared its intentions as the closing was above the moving average mark. So this condition for the bearish movement, it failed on Wednesday in the last half an hour. And because of that, it was clear that for now S&P 500 is going to sustain and no more bearish movement as of now. Anyways guys, I am going to discuss each and everything, these the candles, the impact of the candles, the bullish movement, the bearish movement in this S&P 500 weekly technical analysis. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And if you want to get these the daily and the precise updates of the S&P 500 from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the agenda of this S&P 500 weekly technical analysis. The first point of the agenda is the S&P 500 technical analysis on the weekly chart. So on the weekly chart, as usual, both of the S&P 500 and the Dow Jones are heavy, very heavy, overbought and saturated. I will show you through the technicals. So I will analyze the chart of the Dow Jones and the S&P 500 and then we will see that what is happening there. So guys, once again, weekly chart is the big picture. Okay. Point number 2 of the agenda is the S&P 500 technical analysis on the daily chart. Daily chart, as you can see, this particular special candle here, this particular special candle here, and then the closing of or the failure of this the two consecutive closings below the moving average. All of these things we are going to discuss in this the point number 2 and its implications, whether it will remain bullish, if so then for how long, etc. etc. Okay, daily chart means the short term picture. Point number 3 of the agenda is the probable movement of the S&P 500 from February 26th, which is Monday, to March 1st, that will be Friday. Whatever is going to happen in the S&P 500 from February 26th to March 1st, I am going to discuss in the last point of the agenda. Just like what I have discussed here, these are conditions, these the mark, okay, and a sustained movement above and below, and then the two consecutive closings below this the moving average, etc. etc. So I will discuss all of these the conditions here in the last point of the agenda. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And also, if you want to get the daily and the precise updates of the S&P 500 from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the first point of the agenda of this S&P 500 weekly technical analysis. And in this, the first point of the agenda, I will do the technical analysis of the S&P 500 on the weekly chart. So this is the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. Okay. Now, first the candle itself, it's a heavy bullish candle, but the candle, it failed to close in a condition wherein we can say that there will be a gap up open, right? So although it's a heavy bullish candle, but there is no indication of a gap up or the gap down open through this candle. Just the bullish sentiments, that's it, nothing else. And similarly, when we look into this, the candle of the Dow Jones, similar candle, heavy bullish candle, but there are no confirmed indications of the gap up open or the gap down open. And if you have subscribed to my YouTube channel for last many weeks, months or years, then you know that generally we are able to predict the gap up or the gap down open, and it happens 100%, right? But this time, no. Because of the formation of this candle, okay, where we have this, these are wicks in both of these sides. So there is no confirmed gap up or gap down, okay. So only on Monday we will come to know what is going to happen, whether there will be a gap up open or a gap down open. So what it indicates, the candle, it simply indicates bullish sentiments or good bullish sentiments. What it means? This means that even if there comes any fall, then also the market will try to correct itself and will try to sustain, okay, through these the bullish sentiments. That's it, nothing else, right? Now let's see what the technical indicators are saying on this, the weekly chart. Technical indicators, if you notice, moving averages as usual, absolute, all of these are technical indicators, Ichimoku cloud and Bollinger Bands, then MACD as usual, stochastic RSI, fine, and then we have the absolute saturation and the overbought, right? So now what we can say is that on the weekly chart, the S&P 500 is 100% or absolute bullish, 100% bullish or absolute bullish, as well as heavily overbought, as well as heavily saturated. As simple as that, okay. So there is no change. Last week also the similar condition was there, okay, and prior to that it was also there, and because of that we have seen, okay, some softening in the market, okay, in the previous week, and then again the same condition. Now Dow Jones, in case of the Dow Jones, okay, almost similar thing, okay, nothing has changed, but Dow Jones looks much stronger as compared to the S&P 500, okay. Moving averages, fan out, Ichimoku cloud, okay, Bollinger Bands and stochastic RSI, okay, saturation, overbought, everything is there. So this means that Dow Jones is also 100% absolute bullish, absolute overbought, absolute saturated. Simple, okay. So this is the indication, or this is what the technical indicators are saying on the weekly chart. So what it indicates, or what does that means, that heavily saturated or heavily overbought, or extremely heavily bullish? So this indicates that as of now the market is heavy, clearly heavy, okay, and also as of now it is trading in a particular condition wherein we can anticipate a sudden fall. Not a sequential, not a small or this kind of fall, no, a sudden fall. This sudden fall can be seen either in the form of gap down open, okay, that there comes a gap down open and it fails, or it is trading as usual and there comes a sudden fall, a very sudden fall, okay. This is what these the conditions indicates clearly, okay. If there comes a sudden fall but it gets support, okay, at these very heavy support levels, in that case definitely it will sustain and it will move up further. But if it fails to sustain at one heavy support level, in that case what will happen? In that case it can trigger profit booking, okay. Profit booking means a sudden and a heavy fall, and this heavy fall will be seen either for the entire day or for more than 1 or 2 days, okay. That will be the profit booking. Anyways, we will discuss all of these conditions in the last point of the agenda. So for now, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And if you're looking for these the daily and the precise updates of the S&P 500 from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, there is one more thing. This is the stock market knowledge transfer program, or the S&P 500 knowledge transfer program. Through this program, I teach the movement, hacks, strategies, trend analysis, manipulation, technicals, predictions, support, resistance, and much more. So the motto of the program is to help you become self-reliant. And this program is delivered one-on-one basis. And also this is my email address, and this is the Google spreadsheet, and the details are there in this the Google spreadsheet. When you follow the Google spreadsheet, then you will see that what is included and what I'm going to cover, from the basics to the advanced, and all of the technical indicators that I use, the modified technical indicators, their values that I will share, the trading strategies, the options, market analysis, options calculations in the real time, and all of these are strategies, and then how to deduce the trend of the market, how to predict the movement in the market, what is going to happen and how it is going to happen and why it will happen, the manipulation, the short-term intraday hacks, long-term, short-term hacks, etc. Then this is my email address, and these are the simple terms and conditions, and these are the snapshots of the recent meetings. So guys, whenever you want to participate in this the stock market knowledge transfer program to learn the movement, predictions, options, strategies, so this is my email address. You can simply drop me an email. I have also mentioned this my email in the description of the video, and the link to this program is there in the description of the video and also in the comment section. Now guys, I am going to discuss the second point of the agenda of this S&P 500 weekly technical analysis. And here in this the second point of the agenda, I will do the technical analysis of the S&P 500 on the daily chart. This is the daily chart. Daily chart means one candle represents one day, not 1 hour or 1 week. One candle means one day. Now first comes the candle. This is a special candle, okay, a bearish candle. So we cannot say that it's a spindle, okay, it's simply a bearish candle. It has formed here, okay, this was the rally and it has formed here, okay. So in this case, what we can say that there is heavy, or there is, if not heavy, then there is good bearish pressure on the market, okay. And through this bearish candle, there is some probability or some good probability of a gap down open on Monday, or irrespective of any open, an initial bearish movement. However, once again, there is good probability, but this is not 100% confirmed, okay. Because in order to confirm 100%, both of these, the weekly chart and the daily chart, must give the same interpretation, okay. But in this case, it's only the daily chart, right? That is why there are good chances that that we can see a gap down open, okay, or a flat open, or irrespective of any open and initial, there's the downward movement, okay. But again, this is not 100% confirmed because of this particular reason, okay. Now yes, so this candle indicates pressure, okay, or bearish pressure in the market. And now this is the Dow Jones. This is the daily candle of the Dow Jones. What this candle is, okay, it's a bearish doji. Bearish doji. Why it is a bearish doji? Because the head of the candle is below the 50%, of the mark, 50% of the candle itself, okay. So you can clearly see that the head of the candle is here below the 50% mark, okay. And secondly, the closing of the candle is approximately equal to the open of the candle. That is why it is bearish doji, okay. So what this bearish doji indicates? This bearish doji indicates some good bearish pressure in the market. This also indicates a probable gap down open, again a probable gap down open, or irrespective of any open, okay, a bearish movement. Now whether this bearish movement comes through the Dow Jones, okay, or the S&P 500, okay, or whatever happens initially after open, either a gap down open or whatever will happen, there is a very strong support, okay. And after that we have the very strong support at 5048. Now 5048, it was earlier, okay, it was the all-time high of the S&P 500, and also this was my calculated resistance level, but now this is going to act as support level, okay. This means that any kind of bearish movement for now will be okay, it will be subjective, means yes, it will be subjective, and we will have to see whether the market is able to sustain or not, as simple as that. If it fails at these levels, in that case definitely okay, there will be heavy bearish pressure, more selling can be seen, and this more selling can be convert, or can be seen that and this more selling can convert into profit booking, right? This is there. Yes, there is one more possibility. Okay, that possibility is only in the case of profit booking. Okay, means if somehow there comes a gap up open, a good gap up open, and immediately upon open it moves up. Okay, so that will be a condition for the profit booking. So that I will discuss in the next point of the agenda. But for now, okay, this is clear. This is the candle, right? And similar thing and similar interpretation and the similar thing I mentioned in the point number 4 of my final update yesterday to my Patreon community members, that closing of the S&P 500 in between 5101 and 5087 means the S&P 500 has closed as a kind of a spindle, okay, most likely, and also as a technical bearish candle, and technically this can give a gap down open on Monday, or irrespective of any open, an initial bearish movement on Monday will be. So this was there in the final update, point number 4 to my Patreon community members yesterday. Now, so these the conditions are clear. Now let's see what the technical indicators are saying on this, the daily chart. So technical indicators, clearly moving averages, clear fan out, no change, Bollinger Bands, Ichimoku cloud, same, bullish, bullish, bullish. Yes, there is a change, that because of this very heavy bullish movement, more than 2% bullish movement, okay, on Thursday because of Nvidia and because of these tech stocks, the MACD, which was earlier trading bearish and was putting pressure on the market, the MACD has now changed to bullish. And now and it's not just the MACD but also the stochastic RSI. So now all of these are technical indicators now aligned or have realigned bullish. Okay, and other than that, okay, some saturation and some overbought is there. So what we can say is that on the daily chart, S&P 500 is 100% or absolute bullish. Okay, and it is a little overbought but saturated. Okay, this is on the daily chart through all of the technical indicators. But the most important part is the MACD, that the MACD has changed from bearish to bullish because of this heavy 2%, more than 2% movement. Now in case of the Dow Jones, okay, if you notice the same, very okay, this the similar thing is there in case of the Dow Jones also. However, there is a little problem. There is a little problem in the Dow Jones. What is this the problem? The problem is that the MACD of the Dow Jones, is still bearish. It has not changed to bullish. Although stochastic RSI has changed to bullish, okay, and overbought and the saturation, okay, these are conditions are normal, okay, but are very near to, okay, there these the levels, okay, means it can become overbought or it can become saturated, okay, if there comes just one more bullish candle. Okay, but yes, I was discussing the MACD. MACD is still bearish. This means that if on Monday there comes a bearish movement in the entire market, there comes a red candle in the entire market, okay, or in the Dow Jones, especially in the Dow Jones, then what will happen? The MACD will not change to bullish, it will remain bearish. Okay, and then what will be its implications? Slip. Okay, if you have subscribed to my YouTube channel for last many months or years, then you know the concept of slip. In that case, MACD, which was about to give a bullish crossover, will not give a crossover, rather it will simply form a slip. Okay, it will remain bearish, it will form a slip. Then what will this slip do? This will force the entire market to give up heavily, just like these heavy candles intraday, very heavy candles. Whenever the slip forms, okay, it brings heavy movement, very heavy movement. Okay, generally this movement is seen only for 1 or 2 days, okay, this heavy movement. But if the, again remember, if the Dow Jones fails to give the MACD, okay, if the MACD in the Dow Jones, if it fails to give a proper bullish crossover on Monday, remains bearish, in that case it will be problematic, not just for the Dow Jones, but also for the entire US stock market. In that case, a sudden and a heavy fall because of the formation of slip will be there. Okay, anyways, whether this slip forms or not, if you're my Patreon community member, so I will clear this thing. Okay, so now what we have seen is that S&P 500 is 100% bullish on the weekly chart, 100% bullish on the daily chart. This means that yes, S&P 500 and the Dow Jones both are absolute bullish, we can say. Okay, Dow Jones MACD is a little problem, but still we can say absolute bullish. Okay, considering the weekly and the daily chart, absolute bullish, as well as saturated and overbought, considering the weekly and the daily chart, or absolute saturated or absolute overbought. Anyways guys, whatever will be happening, I will keep you posted through these the daily and the precise updates to my Patreon community members. And those who are new or who have not yet joined my Patreon community, then let me tell you that I give these daily and the precise updates of the S&P 500 every day from Monday through Friday, the precise movement, and almost all, like most of the time, the S&P 500 okay trades like that, okay, in between those the levels. And other than that, I also give these the stock market opportunities, minimum 5 to 10 every week in the premium stocks of the US stock market. And guys, whenever you want to join my Patreon community to get the daily and the precise updates of the S&P 500 from Monday through Friday, as well as the stock market opportunities in the premium stocks, then I've given the link in the description of the video and also in the comment section. And when you will follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And on my Patreon page, you will see that there are these the two tiers. And as such, there is no difference between these two tiers other than the geographical location. So this is the daily S&P 500 updates for non-US and Canada residents. This is the daily S&P 500 updates for US and Canada residents only. So whenever you subscribe to either of these, then you will be getting the daily and the precise updates of the S&P 500 from Monday through Friday, as well as the stock market opportunities, minimum 5 to 10 every week in the premium stocks. And guys, if you notice that many people have joined my Patreon community for last many days, weeks, months, more than a year or so, and they are getting these daily and the precise updates of the S&P 500 from Monday through Friday, each and everything, as well as the stock market opportunities in the premium stocks of the US stock market. So guys, whenever you want to join my Patreon community, I've given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community, and you are welcome. Now guys, I'm going to discuss the third and the last point of the agenda of this S&P 500 weekly technical analysis. And in this, the last point of the agenda, I will discuss the probable movement of the S&P 500 that will be applicable from February 26th, which is Monday, to March 1st, that will be Friday. So first of all, a few important things. Number one, but yes, before that, this was the midweek update. This was the technical analysis in the form of midweek update on February 21st. And I've discussed a lot of these conditions and movement. So I will discuss a few things of this midweek update video, which are going to be important for the next week. Okay, here. Yes. So now the first important thing is Wednesday GDP data. Okay, before Wednesday, Tuesday, some more economic data will be posted. Then Wednesday, GDP, okay, second quarter data projections will be published. Okay, so this will impact the movement of the market definitely. But the most important day is Thursday. Thursday is February 29th. February 29th, Thursday, in the morning, PCE, core PCE data will be released. It will be published. Okay, pre-market, before the open of the stock market. Recently, we have seen CPI data, core CPI data, worse than expected. Means it was better than expected for the economy, but it was worse than expected for the stock market. PPI data, core PPI data, it was better than expected for the economy, but worse than expected for the stock market. Okay, but still we can see that the S&P 500 has moved up significantly. Now the third or the last is the PCE and the core PCE. If the PCE and the core PCE data, if it comes better than expected for the economy but worse than expected for the stock market than 1, 2 and 3. The stock market won't be able to handle this extremely bad news. And in this case, whatever we have seen here, okay, this was this was 2% fall intraday, I guess 2% or so, 1.7% fall intraday. But in this case we can anticipate some heavy fall, some good or some heavy fall. And this fall will not be just there, okay, only for one day, but this fall is expected to be continuous in terms, or yep, we can say like kind of profit booking will be there, then sequential profit booking will be there. Okay, so Wednesday things will be very much clear and on Thursday this. However, yes, if the PCE and the core PCE comes or gives some relief to the stock market, in that case definitely, okay, we'll see where the stock market is trading, okay, before this the data is published. And if there comes relief, if the data comes as per the expectations of the Wall Street and the Feds, in that case definitely the market can look forward like for more bullish movement. But as of now, even with the data, more bullish movement, okay, it is subjective, it is highly conditional. Anyways, so these are the days. Now let's focus on the numbers, okay, and the movement. So yes, first thing is it is clear that because of the formation of this candle, and because of the formation of this candle, we are anticipating some bearish movement either in the form of gap down open or an initial bearish movement on Monday. Now this means that if there comes any bearish movement, then we have one very good or very strong support here, okay, it will be able to sustain at this support, okay, and as long as it is sustaining at this support, okay, it will remain good, okay, it will remain in a very comfortable, okay, condition, very comfortable position, okay, not a problem. However, if it gives up, then comes the next and the very heavy resistance level 5048. Okay, I have disclosed this number in the previous S&P 500 weekly technical analysis also, 5048. This means that any fall from here will be handled by at first, okay, this particular very heavy support level, okay. A failure here means 5048. Now as long as S&P 500 is sustaining at or above 5048, we can say that it is very comfortable, okay. Yes, for the bullish movement it must sustain above this particular support level, then only bullish movement can come. But if it is sustaining above or at 5048, this means that it is sustaining, okay, it is neither giving up nor moving up, okay. But in order to move up, it must sustain above this heavy support level. In the bullish side, there is we can say that if there comes profit booking, okay, or let's say if there comes a condition that on Monday there comes a gap up open. What if there comes a gap up open on Monday, okay, for some reason, maybe because of European market or for the Asian market. Recently we have seen that the Japan has officially entered into the recession officially, and still the Japan's this is the index Nikkei, okay, it is trading at all-time high level. This is the natural reaction of the stock market whenever the economy enters into the recession, just like Japan, okay, UK and recently Germany, they have entered into the recession, okay, these three big economies. So we have seen that the market gives a very heavy bullish reaction, okay. So Nikkei is at all-time high. Why this is at all-time high? Every time it happens, whenever there comes a bubble burst or whenever there comes a recession, okay, big thing, then there comes exceptionally bullish movement or exceptionally heavy movement, okay, and then immediately then something will happen and back to back whatever we have seen, okay, in February, March 2020, okay, that kind of movement will be there. So this kind of heavy bullish movement, it is generally or always historically we have seen it is just, okay, for this the FOMOing happening, okay. We will simply follow the levels, the numbers, the technicals, and that's it, okay. So this will help us to trade safely, not a problem. Anyways, yes, the bullish movement, if there comes a profit booking condition, means if there comes a gap up open, immediately upon open it moves up, immediately upon open it moves up, okay, it sustains for a minimum of 15 minutes, as bullish, okay, and then it further sustains for 30 minutes or 1 hour it sustains, okay. But when the first hourly candle forms, okay, then either the first hourly candle, okay, it's a doji candle or a bearish doji, okay, or a technical bearish candle, okay. In that case, that will be the first indication of the profit booking, because as of now it is, or it has reached to, not just the S&P 500 but also the Dow Jones has reached to the levels of this, the extremely, what we can say, extreme resistance or extremely heavy resistance. Now there is only a little scope, okay, or some see, in terms of the Dow Jones, because the Dow Jones is trading at 39,131, okay. So in terms of the Dow Jones, 100 points, 200 points, not a big deal, because it is trading in 39,000 or so, okay. So 0.4%, 0.5%, 0.2% movement, okay, fine, okay. So this means that S&P 500 is also going to see, or is also at or around its very heavy, very critical level, okay. It has sustained so far very well, pretty well, okay, not a problem. But now for any more bullish movement to happen, when I say any more, I'm saying any more long-term bullish movement to happen, okay, the S&P 500 will have to give minimum 3 consecutive closings, minimum 3. Generally, okay, if you have subscribed to my YouTube channel, I always say 2 consecutive closing, but no, this time I'm saying 3 consecutive closings in the S&P 500 and also 3 consecutive closings in the Dow Jones above this very heavy resistance level. Only if this happens, then we can say that whatever FOMOing was there, whatever speculation or whatever it was there, manipulation or so, okay, technicals, whatever it was there, it will continue, it will remain in the picture. So we need 3 consecutive closings above this very heavy resistance level, and if it fails, in that case there will be no long-term bullish movement. Whatever the bullish movement it will be just short-term and will be up to or around this the resistance level, and that's it, nothing else, okay. Bull side is clear. Now let's talk about this, the bearish side. So bearish side, as I mentioned, 5048, okay. 5048 is the condition for the the bearish side, okay. Now what will happen, okay, if the S&P 500 loses the 5048? Losing 5048 means S&P 500, this can force the S&P 500 or the market to enter into the profit booking condition. Profit booking, okay, profit booking. What is profit booking? Profit booking means that those who were bullish, who have bought here, and now they will see that market is not going to sustain, it is coming down, they have some stop loss here and it will hit, and they will book their profits and they are out, okay. That is the profit booking. Now the very important part that I mentioned here, okay, in this video, the midweek update on February 21st, it was the profit booking through the stop loss, and this important part was the stop loss, okay. So what was that? Stop loss means, see, as of now what is actually happening is that the professional traders and everyone, they understand that the market is getting, or market is okay, it is already, unstable, okay, or the market is extremely heavy, and it is so heavy that whenever there comes a fall, okay, or selling, then it won't be able to handle its own weight, okay. It is so heavy, okay. Other than that, it has not yet fulfilled its technical obligation to 4818, which was the all-time high earlier, previous all-time high, okay. Generally, whenever the index or the stock, it reaches its all-time high, it moves up and then it comes back, it tests the previous all-time high, and then only, okay, we can say that whether it will remain bullish or bearish. In case of the S&P 500, it was never there, okay. So everyone understand that, see, means the market is getting riskier day by day, okay. So this means that they are keeping their stop loss, okay. So many, or not many, but all of these are professional traders, okay. They are keeping their stop loss, okay, somewhere around, okay, in the comfort zone. Let's say the initial comfort zone is 5048, okay. This means if the 5048 is breached, then many of these stop losses will hit back to back. Other than the next comfort zone, okay, that we have seen, it was around here, okay. This was 4921. Now 4921 is the real comfort zone as of now, I can say, okay, because if you notice 4921, 4921, 4921, okay, and also on February 13th, Tuesday, we have seen that 2% intraday fall, it came down, and just like I think in last 30 minutes or last 15 minutes, okay, just like this particular day, okay, similar thing in last 15 minutes or 30 minutes, a heavy reversal, okay. and it came down exactly to 4921. Okay, well, it came down to 4920.31, but 4921 is my calculated support level. Okay, so this was my level, and then okay, it came down earlier, and earlier also we have seen the same thing. What it indicates, this indicates that most of these the stop losses, okay, and this is exactly the same thing I mentioned here. And if you have not watched this the midweek update, then you can watch this particular section of 4921. Okay, this means that if the S&P 500 fails to sustain at 5048, it comes down, loses 5000, comes down further, and the selling accelerates, the stop losses hit back to back, then it will be 4921. It will have to sustain at 4921, because if it loses the 4921, if it comes down further, in that case there is a very heavy volume below 4921, and this heavy volume will means let's say there is a fall of 1%. Okay, and if it comes down, or if it comes below 4921, then this 1% will be converted into 2% or more, or 2% into 3% or more, because there is a lot of volume here below 4921. Okay, and what is that volume? The stop loss. So it will trigger automatically, back to back. Okay, just like we have seen 2% movement, okay, upward, this the bullish movement, it was just moving up heavily. Similarly, a very heavy back to back, but yes, whenever this will hit stop loss, it will come down, then this will be very heavy. This may be like 3% or maybe 4% movement intraday. It will happen. There will be no reversal, nothing, no going back. It will simply come down, and then whenever it will be coming down, whenever it will trade below 4921, then it will be heading to where? To 4818 to fulfill its technical obligation. As simple as that, right? This means that 5048, 4291, these are two key levels and two very important levels. Yes, there is one more level, this is 5000, and there is another support level which is near to 5000, and there is a little zone. Okay, so after losing 5048, the S&P 500 can sustain, okay, at this particular small zone. Failure at this zone means most likely 4921 is there in the picture. Okay, just like what we have seen here, 5048, it closed at 5021. Next day, 4921 was there in the picture. Okay, and then after 4921, okay, 4818, and also after 4921, it will be the reversal. Okay, this will be the reversal cycle. It will enter into its reversal cycle. Okay, reversal cycle, okay, it will be like 4700, okay, 4600 somewhere. Okay, reversal cycle, a short-term reversal cycle. And again, one more thing, remember, for now, any bearish movement, okay, or any fall in the market, even if this fall comes back to back for 2, 3, 4 days, or 5 days, 1 week, or 2 weeks, this will not be seen or considered as the change of trend. No, the trend will still remain bullish. Yes, the trend can change from bullish to neutral, but it will not be bearish trend. No. So we will say that whatever reversal is there, whatever the bearish movement is there, this bearish movement, it's a short-term reversal in the long-term bullish trend. As simple as that. For the bearish trend to happen, okay, the S&P 500 has to lose 4700 mark. It has to come down. It has to sustain. So there are a lot of conditions for the bearish movement to happen. Okay. Anyways, remember, Wednesday, and then Thursday. These are two very, very important days. And these 2 days, especially Thursday. Okay, Thursday, it will define the fate of the stock market. Okay, whether the stock market can further sustain bullish. Okay, at least until the next FOMC, or if the stock market is going to come down heavily and is going to enter into its reversal cycle. Anyways, whatever will happen, whatever will be happening, I will keep you posted through the daily and the precise updates of the S&P 500 to my Patreon community members. And if you have not yet joined my Patreon community, then I've given the link in the description of the video and also in the comment section. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit like if you like this video. And also if you have any questions that you want to ask, then please ask your questions through the comment section. So guys, this was my S&P 500 weekly technical analysis for the week of February 26th. That means from February 26th, which is Monday, to March 1st, that will be Friday.